Here we go, up 0.6% on the advanced retail sales for August. That is not as high as the expectations. We were looking for a 1% number. If you strip out autos, up 0.7. We're also expecting up 1% there. Take out autos and gasoline stations sales, up 0.7. We're expecting up around 1%. And finally, the control group number that gets fed into other data points, actually minus 0.1%. We're expecting up 0.3. These numbers are a bit on the soft side. They aren't out of the realm of positive, though, and that's a good thing other than the control number. But it is an advanced read, and they put in advance for a reason, because this will get tweaked into final August numbers that will replace these. Ultimately, the effect on the market, at least the markets that are open, we see 0.66 on a 10-year note, which has been hovering right there, right in the midpoint between the high at 90 basis points from June and the low, all-time low of 0.50, 0.5% in August. The median is 0.7, and that's where we've been gravitating to. Hey, revisions are coming out. Subtle revisions, all taking something away. So the number last time, of course, was up 1.2. That's now up 0.9 on retail sales headline. Strip out autos, that moved from 1.9 to 1.3. Strip out autos and gas, moved from 1.5 to 1.1. And the control number, which was a wild 1.4, that's really high, moved to 0.9. So both what we received today and what's in the rearview mirror, all a little less than we were expecting. Andrew, back to you.
Okay, Rickster, appreciate it very, very much. Stay where you are. I want to bring in Steve Liesman to join us with more on these numbers. Steve, are you concerned?
Concerned, but not necessarily surprised, Andrew. This is a hit to the economy is recovering faster than we thought. I'm going to throw out what I think is perhaps the culprit here, which is that $600 benefit from the federal government wore off or expired in the month of August. And I think what happened is we took a hit to the growth rate of retail sales as a result. And I'm looking at things like discretionary spending, sporting goods, hobby, musical instruments, and bookstores down 5.7. Very interested to see non-store retailers, which tries to capture the internet, up 0 after being very, very strong. And Rick is correct to point out the control group, that's going to feed into GDP. I think it's also worth pointing out here that what we're looking at here, consumer spending is 2/3 of the economy. The goods spending within that is 1/3 of consumer spending. The other side of this, the service sector, is the part that's probably been hit hardest. So what I'm saying is that the goods sector has to hold up very strongly in order for consumer spending to do well. Look, the economy is recovering. We have estimates of a 30% rebound in the third quarter. It's been up from 20%, and I've seen estimates as high as 35%. This could perhaps knock it down. I do think, though, that it may be a bit of the writing on the wall if we don't do more to get funds out to people who are unemployed, or at least some additional benefit from the federal government out there. That $300 benefit from the executive order from President Trump, it does seem to be slowly making its way out, but it didn't necessarily make up for it. Rick is right. These numbers could be revised, although I will point out the June revision was downward. The July revision was downward. The August numbers are a bit of a disappointment, though they are still growth.